Hello everybody, and welcome to this week's version or edition of Selfwealth Live, the technical analysis edition, Selfwealth by Self. That is. Welcome everyone on the show. Welcome, Jason. How are you today?
Hey, Rog, I am good. I'm good. Looking forward to another show. A fair few things to talk about, I think. I know your voice is a bit on the offside today, bit of a bug or something, but I'm sure we'll get through and do quite well.
Yeah, I've copped another bug, and I blame the kids as always. But I've been wanting to say this all morning, Jay. So I'm going to say it. Look, I'm going to give everyone an offer they can't refuse today, right? Just the one from the Godfathers, and that is you're going to be able to see us do a great show once again. Especially Jason being able to give his insights on your tickers and the markets in general, right? So really looking forward to the show. You might see my voice go up and down, but that's fine. I'm pumped and ready to go as usual. Welcome once again, everyone. Thanks for bringing in your tickers already. Looking forward to it. As you know, if you're a first timer, we'll go through the general markets, the Aussie market, the US market, and the Hong Kong and Chinese market, the markets that we offer at Selfwealth by Scythe. That's the reason why we do that. All right. Got any general questions? Pop them in. But the majority of the show is going to be looking at your tickers at the end. Obviously we get quite a few, so we'll go through two of everyone's, and if we can get through as many as we can always circle back to the third of anyone's as well, right? So I'm trying to work on the best system here, so we're not here for 2 hours, right? But it's been great because at the end of the day, you guys are coming with the tickers, and it's something that we really appreciate. All right, so let's get cracking and let's move on to our disclaimer, please. Thanks.
So just briefly, everything today, general commentary only, no personal advice in any of this. And I'll quickly put up our disclaimer that we do each week. And it also notes that I'm not part of Scythe. My business is Motion Trader. And so you see my details at the top of this disclaimer, licensing, etc., general commentary. And beneath there, you've got the Selfwealth disclaimer as well, licensing, general commentary, all that important stuff in there.
Beautiful. Thanks, Jace. All right. So a couple of Australian big news events happening today. One is the RBA decision, obviously, but we're sort of slowed down on that Australian market a little bit as the all-time highs. How's it looking?
Yeah, well, let's jump into the charts, and we'll kick off with the ASX 200. And so look, as you note, Rog, really, the ASX 200 has been tracking sideways for a little bit over 3 weeks now. And so this makes this the longest consolidation since the low down in April. And you look at all the previous pauses, and they're really only just lasting a few days, a week at a stretch. And now here we are with a 3-week consolidation. I think the big question here is whether this has been long enough, whether this 3 weeks has been long enough to now sustain an ongoing rally. So 3 weeks isn't a long time, especially when you consider the size of the previous advance. So the market put on about 20% in just 9 weeks, so pretty extraordinary. And this is where it helps to get some historic precedent on how these things have played out before. And we've only got to go back 18 months to get our first example. Just back in October 23, there was a 14% rally over a month or two. There's a short 2-week pullback to the 50-day moving average, and then prices resumed their advance. There's one more example I want to show you, and that's back in 2019. And this was an interesting period, sharp sell-off. It was tariff-related sell-off, if I remember correctly. Market made a low, and then from there, it was a 17% rally over 10 weeks. So not dissimilar to what we've recently seen. There's then a 3-week pullback to the 50-day moving average. And then from there, prices continue their way higher with only brief pullbacks along the way. So it's interesting to consider like how these things have played out in the past. Doesn't mean it's going to play out the same way in the future, but it gives us an idea of what could happen. So bringing it back to current day, with that in mind, could the ASX 200 be ready to do something similar now and move higher again? And I think the answer to that has to be yes. So, not saying it will happen, but it's certainly within the bounds of possibility. And I think we want to be positioned in a way that sets us up to take advantage of that should that occur. So let's just go through a checklist of what we know. So firstly, we've got these rising moving averages. You've got the 50-day, you've got the 100-day moving average. Both of those are trending higher. Prices are also established above the 50-day moving average. So this isn't like 2023. So just remember 2023 where prices were above the moving averages at various periods through various points through the year, but they're also below. So they're just oscillating either side. So they were never really established above the moving averages. And they never just got that chance to become established. And that's because the market wasn't trending. So now it's a different situation. Prices are established above rising moving averages. Look at the situation now. So prices have been above the 50-day moving average for about 2.5 months. So that's a sign of price momentum. The last time they were above the 50-day moving average for this long was back in early 2024. So you can see when prices got back above the moving averages, and that was back in early 24, and that was in the relatively early stages of an ongoing rally. So we also know that the dips are being actively bought. So you look at all these dips along the way, and they're short dips. They're short, they're shallow. The dips are bought, prices move higher. So from that, we can see that's been the case the whole way up. Pullbacks have only lasted a few days. So that's a sign of buying interest on the pullbacks. So of course there could be more consolidation. This could continue to string out for longer. But overall, I think the path of least resistance is up. And when we have that condition, I think it should be a case of looking for opportunities to participate. And then, as always, as we often talk about, Rod, just using those wide trailing stops to help stay on a rising trend for as long as possible, see off the pullbacks when they occur, and then when conditions do change, have that exit strategy to get out.
Yeah, exactly. And I keep reminding myself once again to keep it simple, keep the process simple. And, speaking to a client just throughout the week and talking about lithium stocks they invested in a few years ago from their peaks and just coming all the way down to the ground, and they were in pain. And if only they knew these strategies to be able to, not to say lithium's not going to come back, right? But could they have reutilized that capital in other areas, right? So in the meantime,
I hear that story so often where people ride a boom and they hold on for the bust. And I was telling members of my motion trader service and my weekly mentoring report exactly that sort of story last week. Went back to the .com boom of some of the people who've been around for a while might remember a stock called Sausage Software, and it was a story of a client of a colleague of mine had bought. I think he bought $10,000 worth of Sausage Software, saw it rise up to $800,000 because the stock went up hundreds of percent, and then rode it all the way back down. So it happens. It happens quite often, be it a lithium boom, an internet boom, a gold boom. It's whatever it may be. You get these stocks that skyrocket, and they don't all go to the moon. In fact, none of them go to the moon. They all stop at some point and have these big pullbacks, and some then get their legs back on and go again, but a lot don't. So you've got to have those exit strategies. Have a plan. It's great to be able to ride a big trend. That's step one. Step two's being able to hold on to much of that gain with an exit strategy. And that's one of the things we talk about a lot, Rod. I talk about it, Motion Trader, and it's really, anyone can tell you when to buy something, but having an idea of when to sell something, you seem to get a lot less commentary around when to sell. And that's the all important part of it, I think.
Yeah, actually, I'm going a bit off track here, but I think and no, there's no right or wrong. Once again, you can hold it to the ground if you want, right? That's fine. No right or wrong, but a lot of the guidance and advice I hear in this day and age as well is always it's ne- it's not. This is the saying. It's not the timing of the market; it's the time you're in the market, right? But can you imagine some poor person has only got a small amount, or right, and then just the whole time they're in the market is their portfolios are 60, 70, 80, 90% down, right? Because they listen to this stuff. And once again, no right or wrong, but I just find it fascinating that we can hold on to losses hoping for the best, right? So,
But I think that's got to be really put into context. It's like I hear that fund managers love to bring that out. It's not timing the market; it's time in the market. And if we're talking about the Dow Jones on, let's put onto a monthly chart. If we're talking about a Dow Jones over 50 years or even 10 years, or maybe not even 10 years, because you do get these periods of 10 years where nothing happens. But like over the long term,
yeah,
20, 30 years, yeah, it's time in the market. You can buy an ETF for a stock index and time in the market, absolutely go for it. But then people might think of that in terms of like, what if it's an individual stock or what if it's a sector? Say someone goes, okay, it's time in the market. So all I've got to do is buy something I think is going to go up, and then I'll just hang on to it. So say you did that in uranium. Say is time in the market. So you buy uranium somewhere on the way up in 2006. You hold on for the bus, but you're just telling yourself it's okay. It's time in the market. Like seriously, yeah, it's gone back up, but you had to wait until 2020 and the bust began in 2007. It's like it doesn't necessarily apply to sectors. It certainly doesn't apply to individual stocks because individual stocks can and do go to zero. So if it's time in the market and you're on the wrong stock, you're going to go to zero. So it's very you got to apply that. That's a nice little saying, but make sure you apply it to the correct instrument, and that usually being an index ETF. Sure, get your all ordinaries ETF. Time in the market, terrific.
yeah.
Not an individual stock. Very different creature.
Yeah, exactly. And the other thing is, once again, we always got to account for. Like, it's a great point. It's contextual, right? Because a lot of it's potentially around ETFs. You said a few weeks ago, we know we've been in such a good period over the last 20 years when it comes to markets in general. Is it going to repeat itself, right? So, yeah, we just don't know, right? But it's very interesting anyway. All right, well, let's have a look at the US market. Slightly different.
Yes, so jump over to the US, jump over to the S&P 500, and new all-time highs, both in the S&P 500 and the NASDAQ last week. And that probably comes as no surprise as all the signs we've been discussing over the last few weeks have been very much about ongoing strength. One of the most interesting aspects I find with all-time highs, Rog, is that a lot of people get nervous and they hear all-time high and then their next thoughts are, well, when's the peak going to be? When a price is going to top out? So they take a positive, which is an all-time high, and then they look for a negative in terms of thinking, well, when are things coming back down? And I think that's the wrong approach. You see, all-time highs, they're not a good predictor of tops. So yes, at some point you'll get an all-time high and then you'll get a decline. Of course, like at some point there has to be an absolute all-time high before a correction. But a lot of the time, there can be a lot of all-time highs before that happens. So just take last year for instance. So here we are in 2024. So prices made a all-time high early in the year. And so if you took that view that, look, all-time highs are bad, it means market must be expensive because it's an all-time high, so I better get out. Well, then you missed a terrific 12-month period in the market. There are actually 57 all-time highs last year. So if you sold out on the first of those all-time highs, well, you'd probably be pretty disappointed. And last year wasn't a rarity. In 2021, there were 70 all-time highs. And if you're wondering, the record number of all-time highs in a year was back in 1995 75, and there were 77 all-time highs in the year. So how many all-time highs do we have so far in this year? Well, it's 7. So that's not to say that it's going to go on to hit 70 or 50 or whatever. Maybe 7 is the maximum number of all-time highs this year. But history does tell us that there is plenty more upside potential. So just hearing all-time high shouldn't be a reason to start getting worried. I think the message from that is, I think the message is really clear. The message is, if something's working, be optimistic that it will continue to work. And that's what trend following is all about, like staying with a trend, letting a profit run. And that's what I'm doing at Motion Trader with individual stocks, like helping members identify the momentum, get on the trend, stay on the trend, then jump off the trend when it's not working. So it's not about predicting the future. It's about going with momentum, managing risk, and then seeing where that takes you. And at the moment, that trend is still up. When we look at this chart, it's a bullish structure. We've got rising moving averages, so the 50 and the 100-day moving averages, they're both trending higher. Prices above the moving averages, and it's been a clear upward progression with rallies, consolidations, and followed by rallies. So we've got higher highs, higher lows. As we talked about with the ASX 200, when you get that sort of rally, consolidation rally, and the dips are being bought, it's a sign that the buyers are wanting to get money into the market, and so that's how you get a bullish trend. Just quickly have a look at the equal weight S&P 500 on an equal weight basis. We talked about this last week, and we talked about how prices were just starting to break out from this 5-week consolidation, and that breakout has continued through the week. So as I said, the signs have been that these new highs were coming, and we never know for sure, but we're likely coming because that was the path of least resistance. And that's continued over the week. Prices are also rallying off the moving averages. Again, 50 and 100-day moving averages, consolidation along the averages, breakout and rallying off the averages. And again, that's bullish price action. And importantly, I think it's a sign of broadening participation in the rally. So when you get breakouts in the equal weight, so stock 100 and stock 500 are ranked equally, it's a sign that a lot of stocks are participating. So it's a sign that so it's telling you that it's not just Nvidia and Microsoft pulling the market higher. There are lots of players in the game. Just quickly back on the S&P 500, we've talked a lot about going with this rally over the past couple of months. I think that continues to be the play. So yes, there are plenty of reasons to worry about stocks and worry. Plenty of reasons why the stocks, why the rally might not continue. But you know what? That's always the case. You go back to pretty much any time in history, and there's plenty of reasons to be worried about things. We always, we tend to find, as humans, we tend to find plenty of reasons to worry when something's working. Fact is, no one knows how it's all going to play out. But rather than try and predict things, I think it's a case of just staying with the path of least resistance, managing risk with wide trailing stops, and letting profitable positions run. At this point, the running is to the upside.
Yeah, once again, I like hearing when there's broad participation as well, right? We know it's not just those biggest stocks as usual, right? So that's the good thing. All right, let's have a look at Hong Kong.
So a quick look at Hong Kong, pull back towards the 50-day moving average through the week. But I think that the sequence of rising lows, rising highs, that continues. That path of least resistance, which we're talking about, the S&P 500, it remains in place with the Hang Seng. I think it's a case of going with the momentum in this market. And when we look at China, I think China's getting very interesting. So prices rallied last week, and they're now testing these previous highs from May and March. I think this is building up towards a breakout to the top side. Selling pressure has kept a lid on prices this year. So every time there's a rally, the selling pressure comes back in and pushes it down. That's been the story since this big rally started in September. There's always the sellers have quickly come in and pushed prices back down. Are prices about to break free of the selling? I think that's well and truly on the I think that's very much a possibility. If the selling dries up, then we've potentially got the conditions in place for a sustained rally. What we potentially have like a big base through here, big base over the last 8 months or so, and prices appear to me to be on the verge of pushing higher from that base. I think a close above these previous highs from March and May. You could probably even use the high from Friday. A close above Friday's high, I think, would be a trigger point. So I think really keep an eye on this one, particularly if you're interested in the Chinese market and you like the potential of this market. I think this is a point to really consider whether a position could be worth taking. The ETF, ASX listed ETF, which tracks the China A50, is CETF. It could be well worth a look if this starts to get a run to it.
Yeah, I like the that recent low as well. It's like a higher low there, which is starting to just once again build that pressure up under the resistance there. If you see, my question is though, if you see a spike like I don't know, obviously there was events that created that, spikes that happened back in March and December, would you still be taking that seriously? Now I'm just going off stuff that you've said in the past, obviously, or would you be potentially a bit more hesitant? How would you see
well,
that?
Here's a spike in December, and here's a spike in March, and I think particularly the December one was like it's different. I think this has got a different setup to it because this is now a lengthy sideways consolidation where prices have been holding above the moving averages, and we also have a sequence of these rising lows. So that's a sign of the bid or the buyers just keep ratcheting up their bids to buy on the dip. Maybe this one in March was similar. We did have rising lows there. It did seem to be breaking high, but then it gave way. And breakouts aren't like a guarantee that a stock's going to run or a market's going to run, but it is a trigger point. So I could have followed this breakout in December, but then when it got back below the moving average, it would have been a case of, well, it's not working. Let's just cut it, take a small loss, move on. The one in December didn't really have the structure to support it. It was only fairly early in the into this big pullback from the high. So I'd be inclined to give it a go if it were to get itself above that high from last week. But then again, as I say, not a guarantee. It can close above there, then it could sell off again. But that's the market. We never know for sure. But if we have a structure that we can manage risk around, where we can say, look, if we buy that breakout, we set a stop back below the moving averages, might be 5 or 6%, and then where's our upside? Our upside could be, well north of 20%. So it shapes up as for me it's shaping up as an asymmetric opportunity should we get that breakout, and then we see what happens.
Exactly. Fantastic. Good to hear. All right. We're finally getting positive around that Chinese market after all these months of just going sideways. So, and even Hong Kong is starting to look better as well. All right. We got plenty of stocks to go through, Jay. So are you ready?
Let's go.
All right. So let's start off with Reese's WTC, please.
It's starting to get some momentum back. So it's back above the moving averages. And you can see like the lows have been rising over the last couple of months. Moving averages have crossed. And it's just starting to break higher from this consolidation over the last, what would that be, last maybe 4 weeks. If I had this, I'd be happy holding it. If I like the idea of this stock, I could even consider buying it at current levels, just having a stop back below these recent lows, below the 100-day moving average, and manage risk that way. But if it starts to rally, nothing to say it can't be back up at new all-time highs in the months ahead. So yeah, this is one I'd be happy holding, and I'd consider buying at current levels.
Okay, very good. Good one. Let's start with the next one. Sorry, is ATX. Jesse's, 20 cent on the dip after initial pump. Do I keep riding? They're curing cancer. A lot of companies trying to, that's for sure.
Yeah, so this is so stretched above its moving averages. So it's certainly not one I'd want to buy here. It can be particularly difficult with these low price stocks when they spike higher. Is this the real deal? Or here's a spike higher from last year, where it goes from not much, 6 cents to 18 cents, and then comes all the way back down and some. So these things can reverse, and they do reverse. So is this going to build into a bigger trend, or is it going to be the initial excitement will subside and the sellers will come through and it all comes back down? So of course we don't know which way it's going to go. If if ways to do this, I'd want to maintain exposure. If I was in this, I'd want to maintain exposure. I could, if I was in at 20 cents and it's now at 32 cents, I'd probably just hold it and see what happens and have my stop. It's such a volatile stock. Where do you put your stop? Like a calculated trailing stop is still going to be back down probably 12 cents because there's so much volatility in it. So as a pure trend following approach, it'd be hold, wide stop, risk giving the whole gain back and see whether it turns into something bigger. For someone who's wants to defend some of their profit, particularly if in at much lower levels, well, then it'd be a case of maybe scaling some out, maybe selling a third or a quarter or something. Take the edge off the position and lock in some profit because just of the volatility of these low price stocks. So look, it'll be clear in hindsight what the play here was going to be. So I think what's clear to me is I don't want to buy it while it's stretched above the averages. If I'm in at a really good level, I might take some profit. If I'm only up 50% because I got in late, well, I'd probably just let the whole thing run, but have an exit level and probably be prepared to give the whole lot back. That's the thing with getting in. Getting in later, it could easily come back down and chop around. So it's probably a bit of a trickier one now.
Okay, fantastic. Next one along is Roberto's, and that is MEI, please.
Just trading quietly along the moving averages. It's flipped from being in a downtrending phase to above the averages. The averages are starting to push higher. It's got the potential to run. Whether it does or not, we don't know. But the structure's there to support higher levels. If I was holding it, I'd be happy holding it. I'd probably have a stop back down. I could probably use the lows from May, a bit below there, maybe down around 7 cents or so. Had to measure it all out, maybe a little bit higher. But yeah, look, I'd be happy to let it run and happy to hold it and see if it runs, see if it starts to break higher. If I was looking at getting some, I guess I could buy some while it's here sitting on the rising moving averages. Doing that though, it's also entirely possible. It just continues to grind sideways for quite a while, and that's why maybe buying a breakout could be a better strategy for others. So if not in it and interested in it, see if it gets a breakout, breaks above that June high. that could be an entry point there with a relatively close stop being able to be positioned on that. So yeah, it's an interesting stock. Let's see whether it can get some momentum off the averages.
All right. G'day, Stackers. G'day, Jennifer. Hi, D. Smith. Let's have a look at TTT, please, to start off with.
Yeah, it's trending. Uptrends in place. This is at this point. This is just a pullback to the moving averages, getting a bit of a bounce off the averages today. If I had this, I'd be happy holding it. If I liked it, I guess we could consider an entry at this point. Like, is this like previous pullbacks to the averages where it pulls back and then rallies again? We've seen this happen several times. Is this going to be the same? I think the path of least resistance is up. So this is a potential entry point, and if not now, then it's maybe buying a break above the June high as being another. That could be another trigger point for getting in. And risk is managed, I think, by a stop probably down towards 20, 22 cents, so comfortably below the 100-day moving average. And it still gives it room to, if it's still consolidating this latest rally, it still gives it room to move sideways. So yeah, one which I think has a good possibility of seeing new highs.
Okay, great. BIS.
Yeah, well, that's a nice upward break in the last week. So it's really got this big. You can see this big coiling or this big consolidation phase it's been through since mid last year. The rally really got carried away, and now it's just spent a lot of time going sideways. I think the positive with this is that there has been interest to buy it. Each time it's come back down into this 250 to 270 region, there's buying interest. You can see these excursions down here to the 270-ish thereabout. There's been the buying interest, and then most recently we've got the rising lows. I think it's a stock which is building up for higher levels. I think new highs above the July mark from last year are entirely possible over the months ahead. It could still take a while, but it's certainly a stock I'd be happy holding if I was in it. If I was looking at getting in, I'd probably wait for the next consolidation now, because it has got a bit stretched above the moving averages. The moving average is just crossing. Often we see in this situation that we do start to get some sideways price action before prices turn higher again. Whether it plays out like that or not, I don't know, but that would be pretty classic sort of price action, which we often see. So yeah, a stock I'd be happy hanging on to.
Okay, fantastic. Next one's from Kirby. MAH, please.
Yeah, probably on the neutral side with this one at the moment. That's a big pullback. The pullback was big enough to have triggered a trailing stop for me. Had I been in this nice trending phase, this pullback would have taken out my wide stop, and now I'd just be on the sidelines watching it. It's too early for me to think about getting back in. Moving averages are close to crossing. So another rally up towards, say, 30, 33, 34 could be an entry trigger for me. That would then be a sign we're getting some more momentum. So I've had a rally from below the averages, back above. We're kind of going sideways. If we got some more sideways chop, and then we start to see some more strength come in, that would be where I'd probably consider buying it. So it's maybe a little bit early for me at the moment, but it's starting to shape up where you can say, look, it could be setting something up, but not quite there at the moment. If I was holding it at the moment, I'd keep an eye on this low point from June. I think a break much below there would start to weaken the structure, and then would have making new lows. The moving averages would start to turn lower again, and the whole thing would start looking a bit vulnerable. But that hasn't happened at this point, So we just watch that low, see whether it holds. If it holds and consolidates, breaks higher, well, great. Let's see what it does.
Okay, CLV.
Yeah, well, this is. Yeah, it's mostly been a stock to avoid for a while. Is it like it's too early for me? Is it trying to form a base? It's potentially moving averages across and prices above the averages. For me, I guess it'd be a case for me of just watching this a bit longer, see if we get some more sort of like sideways price action along the moving averages, and then from there, if we were to get a break higher, that would be probably the point for me to go with it. But it's just a little bit early. Like it's what we're seeing now, similar to what we saw in March, April, where you get a bit of a rally above the averages and then it kind of comes back down and lower again. So yeah, let's see if it can hold on to these gains off the June low. If it can hold on to those gains and then break to a new high, that would be for me. I think that would be a trigger to consider. Until now, then probably just watch it for now. Maybe there's a base, but I think we need a little bit more price action.
Okay. All right, let's have a look at Jennifer wants to know why gold stocks are coming off. The gold price is still on fire.
Yeah, it's an interesting thing. It's like, well, when you consider, so let's look at the world's biggest gold stock, which is Newmont. And Newmont's not coming off, is it? Newmont made a new high overnight. And Newmont hasn't, this is the ASX listed Newmont. So that's Newmont on the ASX. It's trading at a new high today. Let me go to the US listed Newmont, and you can see it almost made a new high last night. But it's coming off lower levels. Whereas you look at a stock like Northern Star, and it's been, it's hardly coming off lower levels. The same with Evolution. So we've seen this big upward swing in a lot of the ASX stocks, like the small to mid caps, like on a global basis. Evolution and Northern Star are probably they're nowhere near the size of Newmont. So I don't know. I don't know why this is. Is it a case of the gold trade getting a bit top heavy in the stocks, and now there's some weakness and there's some not quite panic, but some people who had bought too much and they're seeing the price come back and they're getting concerned and they're closing out some risk. Maybe that's occurring. Like there's some sharp pullbacks. Like some of these gold stocks are back 40%. But it's not the case with gold, not the case with the world's largest gold stock. So I think this is something I've been talking about for over a month now in my weekly strategy sessions. It's been making the point that think long and hard about how much weighting towards gold you have, because gold stocks always unwind at some point. It's terrific having heaps of gold stocks when you're in the upward phase, but when they pull back, they're just notorious for the sharp pullbacks. And if you have a top heavy position at a peak in prices, the corrections can just be diabolical, and you really see some movement in your portfolio. So I've been saying the last month, just make sure you're not overexposed. So when you do get the pullbacks, you can ride them. You can ride them out without seeing those massive swings in the portfolio.
Yeah, I think that's once again a great point you bring up around maybe, as always, making sure you monitor as well the sectors, the industries that your companies that you're buying, and obviously that comes down to a bit of fundamental research, so you're not top heavy on too many of these stocks, right? So yep, very good point, Jace, and hopefully people are aware how to do that. All right, we're looking at SRL, please, from Bernice.
Yeah, well, another one of these. It's not too like it's not like a 2 cent stock like we looked at earlier, but it's a lower price stock, and it's rocketed higher. I'd be staying on board if I was on board. So um, resource play from below the averages to above, consolidated to the averages, strong rally off it. If I was on board, I'd be staying on board and seeing where it goes. I don't know. I'd be too keen to buy some at the moment because it is stretched above the moving averages. It could be, I think it's susceptible to some consolidation prior to another potential push higher. But I'd want to stay on board. I'd be using a wide stop. My stop would be back below 60 somewhere, and I do risk giving a large chunk of the move back, and I do that because I'm giving myself every possibility of staying on a much larger trend. So, could this stock run to $3 or beyond? It certainly could. I'm not saying that it will because I don't know, but it could. These trends can go a long. These trends can go a long way. Um, so I want to give myself every chance to stay on board, which means I've got to give it plenty of room to move around. So that's why I'd risk giving back a, a solid initial gain, in the hope of getting a multiple of that gain. So that's how I'd be playing that one.
Okay, Dennis asks for AR9, please.
Yeah, well, this is you could basically just go through what I said about, I think, today's second stock. It's the same situation where it's a low price stock. It's skyrocketed. Is it going to be part of a longer sustained move, or is it just something's come out, everyone's got excited, and then over the next 6 months it makes its way all the way back down? I don't know which one it's going to be. So if I was on board, I'd be staying on board. If look, I'd all the things I've said already. I'd be staying on board. I'd had my stop back down here at 9 cents or so. Risk giving back pretty much the whole move for the possibility of staying on a much larger move. It's these lower price stocks. They're so volatile. Um, the other thing to think about with these lower price stocks is when you do get a quick 200% move, selling just scaling down, selling a quarter, selling a third, because you do get those stocks. They do rocket maybe a couple 100%, and then they quickly give the whole thing back. So that can be one way to play that small volatile section of the market. But look, for now, for me, I'd probably stay on, see where it goes.
Okay, all right. Next one's Alexandra's BOE, please. Sitting on a 12.45% loss since the 1st of July.
Yeah, well, that's this is within the bounds of reasonable volatility for this stock. It's a uranium play, and uranium stocks are inherently volatile. They're like gold stocks. So if I was holding BOE, I'd be happily holding it. One of the uranium stocks I'm holding is Bannerman, which is a similar sort of situation. I got my Bannerman stake in May, so it's a little bit in profit at the moment. My exit point on this will probably be below the June low. That's probably where I'd say, look, this isn't working for now. But at the moment, I'm holding on. Similar sort of situation with Boss. So it's broken out of this wedging formation, broke higher in May. It's having a pullback. That's overall that can be a healthy thing. I'd be happy holding it. I'd probably be running a stop loss, like getting in at the start of the month. Like, everyone's got to work out how much risk they want to take. I think an appropriate stop for this would probably be below the 100-day moving average, probably below the late May low. Seeing how, but maybe that doesn't work if in at a higher level. So everyone's got to sort of figure out where they want to cut it. But at this point, it still meets the criteria of a stock that could continue to rally a long way. It's pulling back like we've seen it pull back a couple of other times. I'd like to see the dip really start being supported pretty soon. And like if we got price action, which sort of like chopped sideways for a couple of months and then started to lift again, that'd be nice price action. But who knows what we're going to get. But at the moment, for me, this would be a hold. I don't need to buy any uranium stocks just at the moment. Let's see how this pullback plays out, and also considering the uranium price, which it's broken out of this downward trend channel. Nice break. What was that, about 3 weeks ago? It's now pulling back towards the moving average, towards the breakout point. So again, I want to see uranium start to hold the line pretty soon with this pullback it's had. Do we now start to get the sideways price action prior to a breakout? We don't know. This is sort of price action I'm looking for. Let's see whether it develops. Is this dip going to be bought? Or is the whole thing going to give way and goes back into a longer basing phase? But for now, I think uranium's a hold.
Okay. So Roberto has got another one. BCN, please. Is it early for a rounding bottom pattern? Is it too early?
Probably is a little. Yeah, so I'd probably want to see it. To say there's a rounding base. We can see there's like lower lows, and then lower lows need to give way to rising lows. So you kind of need more. More sort of price action like such, where you start to see some more rising lows, and then we could say, well, look, that looks like it's got like a rounding sort of shape to it. So don't quite have that yet, but I can see how that could develop. This probably isn't a stock I'd be involved with at the moment. We don't have enough upward momentum. It's really been there hasn't been great momentum in this for a few years. One which could be interesting to watch, but it probably needs to get up above these at least the highs from April and June to start looking at it a little bit closer.
Okay. We've got BEN.
Yeah, it's probably similar price action to some of the other banks. Like that spike lower was tough. That would have that spike low we saw in April on February, and then continued into April. That was well and truly enough to take out a wide trailing stop. So had I had that stock from lower levels and looking like we had a good trend in play, then you get the sharp move down. So that takes out the position. So for me, would I be looking at it now? So now it's back above the moving averages and tracking sideways. If I was holding it, by all means, I'd keep holding it. It doesn't stand out to me as as far as the banks goes, it hasn't been a terrific play. Like there are other banks, namely CBA, but there'll be others which have done better than it. It's really struggled a bit over the last few years. Pretty much since the GFC, it really just hasn't been a stock that's gone a long way. Then again, must pay some good dividends. When I press the adjust button and adjust the dividends back in, it's been a stock which could have been a good portfolio stock from an income perspective. So looking at just it's absolute price action, excluding dividends, it doesn't stand out to me at this point.
Okay. Next one is Dropbox on NASDAQ.
Well, it's just sideways at the moment. Like we could say maybe there's some rising lows there, but at this point it's capped by resistance at around 33. So I guess if I was holding it here, well, I probably wouldn't be holding it here. But if position appeared in my account, what would I do with it? Well, I could give it the benefit of the doubt and say, look, we do have some rising lows. I could probably put a stop below the lows from March. But if it breaks above these recent highs at around 33, well then that could be a point to add a position or initiate a position. Buying it into some momentum. I want to buy it into momentum. I don't want to buy it while it's just tracking, largely tracking sideways. It really hasn't gone anywhere. And this is on a weekly chart as well. I've just noticed. I didn't switch it back to a daily chart. Let me just do that now. Yeah, so look, it's not a stock I'd be buying at the moment. It's on the wrong side of the moving averages, and it's that overview from the weekly chart. It still stands. It's basically a stock which has just been going sideways for several years. So probably not one I'd be in a hurry to do too much with. It really needs to get above these highs at around 33. So probably just one to watch. It's not one where we really have an active trend or momentum at this point.
All right, David brings up a point. Isn't the path of the ASX just being driven by the direction of CBA? Do we have a Magnificent Seven, Jason, or what, here in Australia? Or?
I don't think so. Not really. No, because the resources and banks don't always do the same thing. So BHP and CBA are the two big ones, and they don't you look at the Magnificent Seven is very much IT based, whereas the top Aussie stocks, it's a mix of banks and resources and some other stuff. I think it's not quite right to say, look, CBA determines what the market does, because then you look at the ASX 200 on an equal weight basis. So CBA is just one part of this, and it has been it's been tracking higher over the years, and there's been a distinct upward trend over since the 2023 low. It's up near all-time highs. So it takes more than CBA to move the equal weight, but it is certainly a significant factor in the ASX 200. There's no doubt about that. But yet, look, other stocks are participating. It isn't just CBA.
All right, fantastic. Jesse's PCK, please. FDA approval expected in coming months. So he's got a bit of a reason.
Yeah, look, there's nothing going on here at the moment. There's not a trend in place. There's plenty of volatility. So see again, you get these rapid moves. This is what we were talking about earlier. Well, sometimes if you play these low price stocks and you get the rapid move and you pick up 100 or 200%, it can be worth considering. Taking a third or a quarter or a half off the table, because often you then get the big retracements, and we've seen this stock do that several times. They don't, and none of them have turned into ongoing trends. So at the moment, you got to if there's a date in mind about some approval should or could happen by a certain date, it's like, well, the market does know that. So if it doesn't happen, that's when you get these sharp declines, and you see it in like a stock like Mesoblast frequently, where it gaps higher, it gaps lower. It's just a nightmare to trade. You can have a trend and then it just gaps lower the next day on these approvals. They're such volatile stocks to play in. I'd probably just leave this one alone. If I was in it, look, I guess I could get. You can use it. I could use that June low. June low is a bit of a point below the June low. Well, then all hint of upward momentum disappears. but I'd probably just find it better looking for other opportunities. Trading on the basis of an approval coming through or not, it's a pretty difficult way to play it, I think. I'd rather look for the clear-cut momentum and go with momentum rather than an approvals calendar.
Okay, let's look at BCM, please. BCM. It's another rounding bottom formation according to M. We just did that one. The one with M now. M for Mary. Yeah.
Look, not really. I don't think we'd call this a rounding base. It's like, well, it's at 1 cent, so it's just hasn't been a stock to be in. Like, it's just such a distinct downward trend below the moving averages. Now it's getting into the below 1 cent. It's just finding some running out of runway to go lower, although it can still fall 100% from where it currently is, of course. At best, I'd say it's trading sideways. It is back above the moving averages. It's not a stock I'd be playing in because it's so hard to manage risk. It's so volatile. Yeah, it's like what's just to give it a bit of room below the moving averages, looking at 30%. That said, if it were to break above the recent highs, well, maybe there's some momentum coming into it. It's above the moving averages. You never, something could develop from it, but I wouldn't call this a rounding base at this point.
All right. Okay. So Silver Sun is asking about MPL. They bought it at an IPO and thinking of selling now. What do you think? Is there any more upside to this?
Trend's up. So, yeah, look, if I had it in my portfolio, I'd just let it run because the trend is up. Of course, no personal advice, and I can't tell anyone what they should do with their portfolios. But what's been like, first thing I do is say what's been working for me with this stock, and what's been working for me is that I've had I bought it early on. What's been working is that there's been a broad upward trend, and what's been working has been holding and staying with that trend and collecting dividends and staying with it. That's not to say it's going to keep going up. It could just go into a corrective phase. It could go track sideways. We don't know. So the trend at this point is up. There's nothing to say it can't go higher. So I'd be holding it. The way I exit the bulk of my position is typically when they come back and they trigger an exit point. So trigger a trailing stop. So I never get out at the high. I'll always give back some at the end. But by doing that, I give myself every opportunity to stay on for longer and get a bigger part of a rising trend. Now, someone else might say, look, I think it's gone far enough. I want to sell now. So sell now, and then they look back in 6 months and it's come all the way back down. They go, look, that was a great move. So everyone's got to do what's best for them. But from a trend following perspective, this is still a stock in an upward trend.
Okay, fantastic. Well, and it's many banks, so my insurance premiums keep on going back, keep on going up over all those years. So now I know why. All right, we've got. Yeah, that's a good point, Leon. Heaps of people watching. Give us a like, please. Thank you once again for reminding me to say that. Let's go on to Dennis's. I mean, it's gold miners once again, so I think we've touched on these points, but let's have a look at one. AUE.
It's doing okay. It's like unlike some of the Northern Star or Evolution, this is just pulled back to the 50-day moving average, which wasn't that far below the share price. The broader trend in this is still up. If I was holding this one, I'd be happy to continue holding it, see if it can find support, see if it continues to find support around the 50-day moving average, trade sideways, and then maybe breaks higher again. So it's a stock I'd be keeping if I was in it, but always managing my risk and having an exit point in mind. I'd be probably back at 36 or thereabouts, maybe for a discretionary exit. at this point. And then that could vary as things change. But giving myself every chance to stay with it, but then managing risk should it turn lower.
Okay, we've got TGM.
Yeah, this is like it hasn't really been performing like doesn't the chart doesn't look like a lot of the gold stocks. It's been pretty. It's been broadly moving higher, but it's a pretty messy move higher. Looks like it's thinly traded. I'd probably just be leaving this one alone. If some materialised in my portfolio, it's like well, it's back above the moving averages. That's probably a good thing. But if it broke back down below the lows from earlier in the month, I'd probably just probably move it on. Does have those declining moving averages at the moment. If it's to maintain any sort of upward trajectory, I think it needs to keep itself above these moving averages, get the moving averages turning back up. I wouldn't want to be in this if it starts trading back below those averages. But it's for me, it's just not. It's too patchy. You just look at the price action. I'm guessing it's thinly traded, and there's not a strong trend there.
Okay, next one from Roger is JDO, please.
Yeah, this was a stock which had a nice trend, which then gave way. The pullback was a motion trader stop, and I remember it hitting its trailing stop during that sell off in April, and it's now below moving averages. The moving averages are still in a negative position. So look, I'd be out of this one. I think it's probably too early to get back into it. It needs to consider getting back into this. It needs to get back above the moving averages. Averages need to turn higher. It probably then needs to consolidate above the moving averages. There's a few things that need to happen before I'd probably be looking at this one. For me, I'd just leave it alone. If I was in it, I'd be thinking, look, I'd certainly want to have an exit strategy if I hadn't already exited, and maybe those lows from May is sort of like a line in the sand, saying, look, if it breaks that, well then I've just got to walk away. You always run the risk if you don't walk away that you just get stuck in a larger decline that just goes on and on. So I think everyone should know their walking point for stocks they hold, unless, of course, they're doing a long-term buy and hold approach, in which case they're probably not watching.
All right, VGL.
VGL?
Yeah, VGL.
It's a stock I wanted to buy several times, but there's just no volume on it on the ASX. It trades on the New Zealand exchange, the NSX. I suspect there's a bit more volume there, but on the ASX, it's too hard to buy with the hope of selling. You just look at the bid and the offer. There is a nice trend in place, and it has a tendency to consolidate into the averages and rally. Another consolidation. I think there's every chance that it pushes to the upside. That's the direction of the trend. I'd be happy holding it if I had it, but yeah, it's just if you look at the bid and offer, it's just way too thinly traded for me to look at. But if holding it on the New Zealand exchange, I wonder whether I can see that here. So it's probably more actively traded here. If I was holding this stock, I'd be happy holding it. I had it's had this little dip below the moving averages. That's okay. Wouldn't want it to turn into too much more. But at this point, I'd be in there with a wide trailing stop. Let the trend run.
Okay, Hassan wants us to look at TLX. 'Cause, 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 'cause
Well, it's starting to lose its footing. We're starting to get a sequence of lower lows. The moving averages have turned to the downside. I think if I was in this one, I'd probably be looking at the like this was a motion trader stop, but I think that decline would have probably triggered the motion trader stock. So stop. So I don't think it's a motion trader stock anymore. If I was still holding it, I'd probably be looking at the like I'd be thinking like where do I say enough's enough? Maybe if it made a new low, maybe it took out the July low, and then I'll have a series of lower lows below declining moving averages, and that's probably where I'd say, look, the upward momentum has been severed. It's building a bit of momentum to the downside. I'd probably just say, look, time to take a bow and leave the stage. If I was in from better levels, if I was in at higher levels, where I just say, look, it's not working, I'm out. Yeah, to persist in the face of continued lower lows is to risk a lengthy slide back down. Not to say that that's going to happen, because of course we can't know, but that sort of thing does happen, and we want to avoid that. So that's why I think that definitive exit point is needed. There is vulnerability to this structure with declining lows below moving averages. So one to be wary of and think carefully about.
All right, next one, PXA, please.
It's been pretty messy, this stock. Like, you look at this from last year, so it rallied and back to the averages, strong rally, then back, and then it failed through late 24, early 25. Now it's back above the moving averages. I'd be inclined to just leave this one alone at the moment. If it were to make a new high above the July high, well, maybe then it's like maybe I could say, look, maybe it's worth giving it a go. There's some signs of momentum, but we've seen these signs of momentum before, and it hasn't really gone anywhere. It's not trending. There's no trend here at the moment. It's just chopped back and forth. So to buy a breakout in this, it's like you never know. A breakout can turn into something significantly larger, but you can also see that could also be just stuck within a large sideways phase, which has longer to run. I don't have a strong feel for this. I don't see a clear breakout point. There's not a clear trend. I'd just be inclined to look elsewhere.
Okay, let's look at BA on the New York Stock Exchange.
Never recovered from the COVID crash lows, really. Yeah, even when you adjust for dividends, there's nothing there. It's just been a stock which has just struggled. They've had all sorts of problems over with Boeing, as I understand it, and it's showing, playing out in the share price. I'd just leave it alone. There's not a trend. There's a big sideways consolidation, and there's nothing to suggest that it's about to end. Like, now it could end here, and maybe we get some sideways and a breakout, and then that breakout then continues to make its way high. There's nothing to say it can't go higher from here, but it's there's no trend at the moment. It's stuck within this broad range. So if we were to get, I think if we were to get some more sideways price action, well, these moving averages have started to shift higher, and then from there, if we got a break above some highs, I'd probably say, look, it's something we could go with, and we can manage risk with a relatively close stop and see whether it develops. That's probably the way to play it. But for now, maybe it is. Maybe look, I know I'm chopping around on this a bit because I'm just looking at it, trying to take the whole thing in. There's not enough to say it's breaking up from this range at the moment, but it has gone from below the averages to above, and it's a strong move. And now it looks like it's finding support as it pulls back to the averages. So maybe there is something in the makings with this, and we say, look, we could go with it at current levels and then have a stop comfortably below the 100-day moving averages. So if it falls back within the range, we say, look, it hasn't worked, move on. But maybe this is a time where it does extend higher. So look, there is probably something worth considering there. But I'd want to have a clear cut exit strategy so I don't just get stuck for years on end in an ongoing sideways malaise that just doesn't go anywhere.
Okay, right at the start of that, you said Boeing's been a company that's had a lot of problems. Definitely don't want to hear that if you're flying anytime soon. So, all right, let's get on to Michael. Michael, I mean, we looked at Clove last week, and I know it's trading below the moving average, so it's on the way down. But let's look at the two others that I quickly reviewed, Michael, that were above. Let's look at OSCR, please, on the NASDAQ.
Well, yeah, it looked like it was getting something going, and then it's just fallen straight back down. Yeah. I'd be leaving this alone for the moment. I don't like this gap down. For a stock which looked like maybe it was starting to get some sort of a lift off. What we would have wanted to see would have been more, the sideways holding on to its gains. See it holding on to its gains, let the moving averages catch up, and then have another rally. But it hasn't done this. Instead, it's just gap lower. So it's all just become a bit of a mess. I'd be inclined to leave this one alone. This breakout hasn't worked out at all at this point.
Okay, MEI, please. MEI. Let's look at the NASDAQ one, because I think Michael's probably referring to the NASDAQ one. New York Stock Exchange, sorry.
Look, not really at the moment. It's this one's been it's been in this lengthy decline. Yeah, it's stuck its head back above the moving averages, but it's done that before. I'd like to see it become more established above the moving averages. See if it get the sideways consolidation and breakout. It could turn into something, but it's got a long history of disappointment, and this is just fleeting above. Its time above the moving average is fleeting at the moment. So let's see if it can hold its ground above the averages with some consolidation, and then break higher again. It's close to being able to say, look, the moving averages are crossing. But I'd like to see it. I'd like to see the next consolidation. I'd like to see it hold on to its gains, hold on to some of the gains, and break higher again, a secondary break. That's when I'd probably be more interested.
All right, Rob's. Let's get on Rob. NEU, please.
Yeah, maybe there's a base and a turnaround happening. Well, you can see you got the classic head and shoulders formation there. So there's the depends how you want to draw it. We could say there's a shoulder, and there's the head. So you kind of got that sort of shape, or you could say like lower lows are giving way to rising lows. So there's some technical structure which suggests maybe there's a turnaround below the moving averages to above, consolidated along the moving averages. The averages are turning. Then we've got that latest rally. It's a strong rally, and it's been holding on to most of those gains. So it's ticking a few boxes as having some potential. I think the stock could probably be bought at current levels and say, look, because I just like the way it's holding over the last couple of weeks. That strong rally and then that shallow pullback. Um, Looking at the price action today, it opened lower, traded to a low. Now it's up near its high. So all signs that there's interest in buying the dip. So say it was bought at current levels, maybe 12 to 20%, depending on like how much you want to give it, something around that region. And then it's asymmetric because it could from $14, it could double if it went back to its highs and beyond. May not do that, but it could. So yeah, I think there's a potential opportunity there. Or wait and see whether it breaks above these just these highs from the last couple of months. So that would be say we're looking at around just below $15. So if you can close above the these recent high points, then there's a breakout, and then maybe have a stop. Could even be below the low from today if that becomes a notable low. So several ways this can be played, but worth having a look at and to think about.
All right. Rob wants us to look at Robbo on the new. Yep, that's the one.
There we go. Is that the one? Yeah.
We'll say it.
Robotics, global robotics ETF. It's interesting. Well, it hasn't really done a great deal over the last couple of years. It's really sideways. It's had a big rally of late. So that's all. I like how it's rallied strongly to above the averages and sideways and broken higher again. That's all good. Next area to keep an eye on. We've got all these. Got some previous highs and sort of just snuck above there earlier in the week. It's come back below. So if I bought some of this maybe around the moving averages a few weeks ago, sure, I'd be happy to hang on and see where this goes. See if it can break higher this time. A bit stretched above the moving averages at the moment, and we've got the overhead resistance. So maybe there is some consolidation before another attempt at breaking higher. If we did get a bit of sideways price action or a bit of a pullback over the next few weeks, and then we get a break above this high from earlier in the week, that could be a trigger point for taking a position. So we're then sort of going with a breakout, rising moving averages, and see where it goes. It's certainly an interesting possibility. I do wonder though, like we have been in a pretty buoyant market since 2024, and this wasn't able to get going during a bullish market. So is it like things can change? The composition of the stocks might become more sought after in another bullish phase should that develop. But yeah, I'd wonder why it wasn't a great play last year in a strong market. So that makes me a little bit apprehensive towards it. I don't know what the structure of the ETF's like, what stocks are in it, but the market didn't like it during 24. So yeah, something to bear in mind.
Okay, Keith wants us to look at CRWN, CoreWeave, on the NASDAQ.
Where am I? CRWN?
Yeah.
That's TSX.
CRW. Could maybe type in CoreWeave. Oh, that's
CoreWeave. That's it there. CRWV.
Yep. Let's have a look at that one.
Not a great deal of data. It's only listed in March, but from what we have, there's an uptrend. If I had it, I'd be holding it. The pullback so far looks like it's finding buying interest because we've got look at the rallies. So the rallies are strong, and then you get these sideways consolidations, shallow dips, which suggests there's buying coming up underneath it, accumulating on the pullback, and then another strong rally, and then another overlapping pullback, which again suggests there's buying interest on the pullback. I'd be holding it if I had it. We've only got the start of a 50-day moving average. It hasn't been there for long enough, so I don't have a great deal to go on. But yeah, I wouldn't buy it because there's not enough price action for me. But yeah, from what we see at the moment, there is a trend, albeit only for a few months.
Okay. James wants us to look at LYC, please.
This has been a volatile stock and remains volatile. It's just like, strong rally and strong sell off. Strong rally, strong sell off. It is making its way higher. There is a series of rising lows and rising highs, so they're the building blocks of an uptrend. But it's been a white knuckle ride. That's for sure. And buying the breakouts has been testing, because you buy the breakout, you get a bit of upside, then you get the big pullback. Buy the breakout, bit of upside, then the big pullback. So it really has required wide stops below the 100-day moving average to stay on board. If I had some of this, I'd continue holding it. I don't know that I'd be buying it on the 100-day moving average at the moment. I'd rather buy it with a bit of a bounce off the moving average. But yeah, it does seem like maybe there's that rounding basing formation. The lower lows give way to rising lows. So I think it's a stock with the potential to see higher levels in the coming months. We could well see it above the December 21 high later in the year or into next year. But it's been a difficult one. Not a nice clean trend at this point.
Okay. My Google. So I don't know what box spread is, but if you want to email our support team, maybe they can discover that. If I haven't heard of it, probably not. But let's have a look at some of your stocks. CSL, please. Oh, sorry. Yeah, CSL also from Bob from Brisbane. So.
Yeah, not at the moment. It's struggling. It's declining moving averages. It's been in this big range since 2020. So we've got 5.5 years of just really oscillating, between highs and lows. It's down at the lower end of that range at the moment. Is it going to hold here and start moving back up, or is it going to break down? I think if it were to break below, these couple of lows, I'd think would start looking at this as being a breakdown stock, and breaking down from a big range, potential targets back down around 160. Hasn't happened yet. Maybe it's going to be like previous times where it does then find support and it does start to rally again. But I'd just be watching it. I'd be aware that if we do see continued weakness, I'd if it were in my portfolio, I'd probably move it on. Again, I say that from an active investing perspective. If someone's buy and hold, and they've been holding this since the float way back when, well, then it could be a different situation. So everyone's got to make sure what they do is appropriate for the time frame that they're looking at. But there's certainly be some technical weakness. Well, there is technical weakness at the moment, and it would be amplified, I think, with a break below these recent lows. Would have a potential breakdown from a large sideways structure.
Okay. BNP.
What was the code again, Rog?
It's BNP, but yeah, there's no exchange there, so I'm not sure if it's one Australian or US. But all right, let's move on. And let's have a look at WDS, please.
I'm just happy to stay away from oil at the moment, although, look, with this, it is holding, it's consolidating above the moving averages. And so this is when we had the sharp decline in oil. Oil spiked, oil came back down. It's now consolidating above the averages. Like maybe there is a turn happening in oil and in Woodside. So just look for the oil chart. It's like I don't know what oil's doing here. There's no trend. It's just a mess, but it is sort of like holding its ground now. And Woodside's looking pretty much like what the oil price looks like. So where oil goes, Woodside will probably go as well. Um, if I was holding some, yeah, sure, I could keep holding some here if I got some in this initial move higher. Um, but I'd probably be thinking about like, look, if it takes a turn back below the moving averages, maybe I'd move it on. Would I buy some here? It's just such a punt on which way is the oil price going to go. We don't have a clear trend. Is there a trend change in the making? There could be, but I'd probably rather wait for a bit more price action. So for me, this is probably one to watch rather than act on just yet.
Okay, we'll do one more and then we'll wrap it up, I think. So just as always, be mindful. I've got a comment there that just says we'll get to everything we can above that line. So if you want, bring it to the next show. Let's look at finally CANG, please, on the New York Stock Exchange for Chevy.
CANG, is that the one?
That's the one, I think. Yeah.
Look, they're rising lows in place. Maybe there's some. It's not we don't have an established trend. It's like is a trend trying to establish? That's probably the way to be looking at this. I'd probably just be watching this one at the moment. If we get some more consolidation along the moving average, and then from there we get a break higher, and like get a break above get a break above that high from where's that from June. Maybe you can see how I can see how something could develop with this to sort of like get a breakout and some momentum. But I think there's probably a bit more price action. There's a bit of price action missing at the moment to really give us the clear picture. So I'd probably just watch this one for now. Maybe there's something developing. Not quite sure just yet how this structure is playing out. So probably one to watch.
All right, fantastic. Okay, we've done another great session today. Another mammoth, a lot of stocks in there, a lot of good ideas, which is great. Thank you very much, everyone, for coming along to another show. We really appreciate you constantly coming in, week out, and just providing and engaging with us. It's been fantastic. Thanks, Jace. Thanks for your time today.
Hey, Rog, that's been fun. We covered a whole lot of ground, hopefully interesting for everyone. And just a note about next week. We can't do a show next week because I'm not here. School holidays and we're off north to warm up. So it's so we're going to be back in 2 weeks' time for our next edition.
Yep, for sure. It'll give me time to get my voice back as well, which is fantastic. So don't forget there, we're going to have a break for the next week. Don't forget to like and subscribe. So send us your comments as well below. Nice comments always make us feel good, but also help us with promoting the show on YouTube, which is great. Thank you very much, everybody, and we'll see you the week after next. Yes, you're right, Keith. I've got to go back to bed now. I wish I could. I've got to go back to work, but all good. Have a great week, everyone, and we'll see you back in a couple of weeks' time. Take care.